The Kuwaiti dinar, the world's strongest currency, has held its position for decades. But how does it really compare to the US dollar? And could this gap ever shrink? Today, we dive deep into the numbers, the policies, and the secrets behind the dinar's strength. Welcome back to Kuwaiti Dinar Analysts, your trusted source for everything currency, economy, and financial forecasting. If you're new here, hit that subscribe button and turn on notifications, because today's analysis could change the way you see global currencies forever. In our last video, we explained why the Kuwaiti dinar is the strongest currency in the world. Today, we're taking the next step, comparing it directly to the US dollar, the world's reserve currency, and exploring whether this gap could ever close. If you missed that first video, be sure to check it out after this one for the full picture. So let's start with the history. The Kuwaiti dinar was first introduced back in 1961, and to ensure its stability, it was pegged to a weighted basket of currencies. This is a crucial point we'll come back to. Meanwhile, the US dollar has dominated global trade for decades, acting as the world's primary reserve currency. It's the benchmark against which most other currencies are measured. When you compare the two today, one Kuwaiti dinar is worth around $3.30. This isn't a new phenomenon. If we look back at the exchange rate over the past 50-plus years, we can see the dinar's incredible resilience. Even through major global events like the oil boom of the 70s, the turmoil of the Gulf War in the 90s, and various financial crises, the dinar has maintained its high value. A huge part of this is due to Kuwait's massive oil revenue, which provides a steady, powerful stream of income for the country. Another key factor is Kuwait's conservative monetary policy. The government and the central bank have historically prioritized stability over speculation, which has protected the dinar from the wild swings seen in other currencies. For instance, while the US dollar's value can fluctuate based on Federal Reserve interest rate decisions and global economic pressures, Kuwait's approach is designed to insulate the dinar from that kind of volatility. It's a strategy of steady strength versus dynamic, global-scale economics. So why is there such a big difference in value? Why is one dinar worth over $3? It really boils down to three main factors. First, and most importantly, is Kuwait's immense oil wealth and fiscal stability. Kuwait sits on some of the largest proven oil reserves in the world. The revenue generated from exporting this oil is staggering, and it's managed very prudently. Much of this wealth is channeled into the Kuwait Investment Authority, one of the world's oldest and largest sovereign wealth funds. This fund acts as a massive financial cushion, giving the dinar a level of stability that is almost unmatched. Even if oil prices were to dip, this fund ensures the country's finances remain secure. Second are the policies of the Central Bank of Kuwait. Unlike currencies that float freely on the open market, where their value is determined by supply and demand, the Kuwaiti dinar is pegged to an undisclosed, weighted basket of currencies. This basket likely includes major world currencies like the US dollar, the euro, and the Japanese yen. By managing the dinar this way, the central bank can smooth out fluctuations and protect the currency from the speculative trading that can cause so much volatility. It's a deliberate strategy to maintain a strong and stable exchange rate, which is great for importers and for long-term economic planning. The third factor is economic scale. The U.S. economy is the largest in the world. It's vast, dynamic, and incredibly complex. But with that size comes a certain level of volatility. It's exposed to global trade winds, geopolitical shifts, and internal political debates that can all impact the dollar's value. Kuwait's economy, while heavily reliant on oil, is much smaller and more controlled. This allows for a more focused and consistent management of its currency value, avoiding the peaks and troughs that a larger, more diversified economy might experience. This brings us to the big question many people ask: could the gap ever shrink? Could the Kuwaiti dinar ever lose significant ground to the US dollar? Let's explore a few potential scenarios. The most obvious threat would be a global oil market collapse. If the world suddenly transitioned away from fossil fuels and oil prices fell drastically and stayed low for a very long time, Kuwait's primary source of revenue would be hit hard. This could, in theory, weaken the dinar. However, remember that massive sovereign wealth fund we talked about? It's designed specifically to cushion the country from exactly this kind of shock. So while a prolonged oil price crash would be challenging, Kuwait is better prepared than almost any other nation to weather that storm. What about shifts in the U.S. economy? This is an interesting one. If the U.S. were to face a period of extreme inflation or a severe debt crisis, the U.S. dollar itself could weaken significantly against other world currencies. Paradoxically, this would actually make the gap between the dinar and the dollar even wider. The dinar would appear even stronger in comparison. So, a crisis in the U.S. doesn't necessarily mean the gap will shrink. The most direct way the gap could change is if Kuwait decided to alter its currency peg system. If the Central Bank of Kuwait decided to depeg from the currency basket and let the dinar float freely, or if they repegged it at a different value, that would instantly affect the exchange rate. However, financial experts widely agree that this is extremely unlikely in the near future. The current system has served Kuwait very well for decades, providing stability and predictability. There's very little incentive to change a winning formula. So, what do the experts and financial forecasts say? We've consulted multiple reports and analyses, and the consensus is clear. The gap between the Kuwaiti dinar and the US dollar is likely to remain wide for years to come. Most forecasts predict that the current stability of the KD/USD exchange rate will likely continue through 2025 and even into 2030. Of course, there will always be minor fluctuations day to day based on market movements and oil price shifts, but dramatic changes are not on the horizon. The peg system is the dinar's anchor, keeping it strong and steady even when minor economic storms brew. For the gap to truly shrink, we would need to see a fundamental, long-term shift in the global energy market combined with a major policy change from Kuwait's central bank, a combination that seems highly improbable right now. So, what does all this mean for you? Whether you're an investor, a business owner, or just someone curious about the global economy, this information has practical implications. For businesses involved in exporting to or importing from Kuwait, tracking the KD versus USD exchange rate is essential for pricing and profitability. The dinar's stability is an advantage, as it makes financial planning more predictable compared to dealing with more volatile currencies. For Forex traders, while the dinar isn't a currency for high volatility speculation, its predictable range allows for strategies based on minor fluctuations and interest rate differentials. It's a game of precision, not wild swings. And for long-term investors, the dinar's strength is a testament to the stability of the Kuwaiti economy. Investing in Kuwaiti assets or funds denominated in dinar can be seen as a hedge against volatility in other parts of the world. It's a store of value backed by real, tangible wealth. For ordinary citizens, understanding this dynamic helps paint a clearer picture of global economics and how a small nation can maintain such immense financial strength on the world stage. Alright, let's quickly summarize the key takeaways. The Kuwaiti dinar remains one of the strongest and most stable currencies in the world. Its significant gap with the US dollar is deliberately maintained by a combination of massive oil wealth, a huge sovereign wealth fund, and a conservative monetary policy centered around a currency basket peg. While external factors like oil prices or US economic health can cause minor fluctuations, the overall gap is not expected to close anytime soon. The system is designed for stability, and it works. If you found this video helpful and want to learn more about the fascinating world of currencies, give this video a like and share it with your friends. Most importantly, subscribe to Kuwaiti Dinar Analysts for more in-depth analysis and forecasts. Don't forget to click that notification bell so you never miss an update. Thanks for watching Kuwaiti Dinar Analysts, your trusted source for currency insights. We'll see you in the next video.